This is David Patrick, Fitzstock Charts, a market video update for March 20th, 2019. We're in a 7-day uptrend. Today's Fed Day. We're going to look at 1998, see if we're going to diverge or stay on the same course. Currently, I've been 110% long market exposure. I was, I believe, 120 earlier in the week. Sold into some strength, booked some profits. Went all cash in my trading account, not because I'm bearish, because my trading account is to trade momentum. We started to lose a little bit of momentum yesterday. I went cash and I booked all profits. So right now I'm 100% cash in my trading account, 110% long market exposure in my swing account, and I'm going to keep an open mind. We're going to look at some charts and we're going to decide, is this the time to stay long or is this the time to get short? We'll look at that in a moment. 90% club, 28 triplers year to date, 73 doublers, 1,015 different options, up over 90%, some of them up over 600% since we launched the service with just simple basic rules of engagement. Not rocket science, just trading trend, looking at price pattern, historical chart pattern comparisons. And that's how we make our money, staying long, adding a price strength confirmation. Okay, so this will not be a long video. We're going to go over all the stocks, and we're going to go over market conditions and the current HCPC that we're looking at. First, this is 1998, and you can see when we saw the golden cross after the death cross. Remember, the death cross is the 50 moving average, the blue through the black, and we saw a leg down here, and we'll look at the current market. This is 1998. When we saw the golden cross, it was a catalyst back in 1998. But when we saw it, we came down to it and tested it. I said last week it's a good possibility that we do that. I'm staying long because I'm not going to predict that happens, and we're still above the 10 SMA, and there's no reason to sell just yet for swing, for trading account. Like I said, I booked all my profits yesterday. But yeah, you can see when the golden cross happened, it did bring a catalyst to a new level, a new high. And then what happened? It took multi-weeks to digest huge gains. And as long as we stay above this golden cross, I will remain bullish long term. Talking about investments and swing long trades. If we would get below that death cross for 2 days, then things would change significantly. Let's get to our current market. And that was the Dow Jones. You can see the golden cross right there. Now, the golden cross is a little tricky because sometimes you test it before you go higher, right? I do believe that this 10 SMA will be tested either today or tomorrow. And there's some short setting up intraday on the ES and a couple other things. So I don't know where we're going in the short term. I posted yesterday after the close that this type of projection right here, you can't roll out. You still want to see these pivotal lows hold, at least on a closing basis. And there's a chance we get knocked out of trend, and that's okay. We're in a 7-day uptrend, 8-day uptrend. We had a 40-day uptrend earlier. The average uptrend lasts a couple weeks. We were spoiled this year. We were spoiled last year with 11 uptrends, but we were spoiled this year with the 40-day uptrend. It's almost unheard of. So the uptrends usually pay for a couple weeks, and then things start to consolidate. And what happens when things start to consolidate? That's when the average trader loses year-to-date gains because they overtrade. Sometimes they add below the 10 SMA because they want to get a better cost basis. And they don't listen to the rules, right? We scale using the methodology to reduce risk, to pay ourselves. And if something then stops us out, we've booked profits already. So if anything, usually it ends up being a net neutral trade or a slight positive or slight loss, depends on how much you were able to scale. But when we have price strength confirmation after we scale, we add. And that's how we get big, huge paydays like we saw in Apple recently, and we saw in Xilinx a couple weeks ago. We were adding on price strength confirmation, and that's when we hit it out of the park. And I was super aggressive with Apple over the last week. For me, it was super aggressive. I had 250 calls on, and usually if I have over 200 calls, like I did with Xilinx also, I have a lot of confidence. I also define my risk if I'm wrong. I don't want to become arrogant or egotistical or think I'm smarter than the market. I'm trading probabilities, and the probabilities I was going to make money. That doesn't mean I have to. I could have 85% chance of making money. There's still that 15% of the time where you're going to lose, and that's why you have to define your risk before you enter every single trade. So here's the Dow Jones. Where are we going? I at least think we're going to test the 10 SMA. Now let's get to the SPX. I know a lot of you don't look at the Dow Jones. I at least think we're getting to the 10 SMA, which is 2,800. We're at 2,825. So I think there's a better probability we're going to test 2,700 than break through 28. I'm sorry. There's a better probability we're going to test 2,800 than break 2,850 in the short term. That's my personal opinion. When you see two back-to-back red candles, you have event risk. Usually the market's getting sloppy. It's getting tired. This MACD bull crossed, and then now it's getting flat. When MACD gets flat, things get tricky to trade. Is this a flat MACD right here? That's almost heading straight up, and that's when we made our money in a 40-day uptrend, right? Is this a flat MACD? No. You just saw when we had ROE there, 27.18. We moved 100 handles in 7 trading days. And you can go back. Is this a flat MACD back here in July? No, and look at the kind of movement. We have a flat MACD. So if our number one momentum indicator is flat, do you think we should be aggressively trading? No. I'm still have some swing longs on, and I might lighten up today to get back to 80% long market exposure. There's a really good chance that happens, but that's all right too. I'm going to stay swing long versus my stops. Right? The market still looks okay, actually better than okay. It looks very good long term when you're looking at weekly charts. And once again, when we look at our weekly chart here, this is the S&P 500. We bounced off support where we're supposed to. We went into an uptrend here, and you're like a 10-week uptrend. And we could come back down here and test this level, and that's all right before we go higher. So I still believe we're going to 2,900 plus, but I also think that there's a very good chance, and once again, this comes down to what time frame you're looking at, that we come and test 2,800 before we go to 2,900. So that's my thesis right now. I'm sticking to it, and once again, I'm doing this video around noon, and there's a very good chance when I get off, I'm going to start lightening my exposure and keep booking more profits, because as much as this is a swing long position, I don't want to give too much back either. So you have to, when we break out, 110, 120, 130% long market exposure. I sold into some strength yesterday, was 120, went down to 110. And I'm probably going to get back to 80% long market exposure when I get off this call or this video update, because I'm comfortable with that. Okay, so let's get right in the stock market here. Let's look at the Nasdaq. Okay, there's the Nasdaq. Pausing a little bit. I've posted this many times. I still feel, this is an area that we're going to, if I can get this drawing tool out. And I know that's a big area, but this is our upside potential, and I've been posting that for a while. And it can get sloppy in here, and sometimes it becomes a little bit more difficult to trade. And I think today is not a great trading day. I don't necessarily think tomorrow is going to be a great trading day. I'm looking forward to a possible thesis of us coming down here and touching the 10 SMA and then going and attacking up here. Maybe like next week, going into quarter end, January, February, March, quarter end and month end. Usually you see some kind of mark up, or institutions, hedge funds, these money managers, it's crazy as it sounds, they mark up stocks. They get paid, obviously, with higher markups, and that is what it is. It's just something that happens often, just like when we see those pivotal lows the week before OPEX. That's another thing we watch for. Also, we watch for quarter-end markups. And we'll see. We're not going to predict. We don't predict with the pivotal lows either. So let's get into, let's flip over to, let's see what we got with energy. Let's look at the oil futures first. Now, oil futures are actually looking pretty well, and they look like they want to get up to that line we talked about. This was our price projection bogey, and now we're getting right into the top end of it. So the problem is there really hasn't been great trades in that sector. Look at the XLE. It's very sloppy, and look at our MACD down here. Our MACD is heading sideways. It's telling us nothing, and it's not good for short-term trading. XLF tried to break out almost like the IBB did a couple weeks ago. It's coming back down, and that's not an easy trade too, but you can look at the MACD. When we look at IBB, same thing as XLF's doing, and it comes back down. It's creating like a wedge or a megaphone, which can sometimes become difficult to trade. You can see I'm more aggressive in my trading account when there's a lot of momentum. Right now, we're not seeing a lot of momentum. So my trading account's all cash, and like I said, I'm going to lighten up on some of my exposure and my swing counts as we get off this call. IWM, now you're talking about a lower high again. And if we get down here, that's a lower low after failing at the 200 SMA. So this is worth keeping an eye on. You don't want to see small caps continue to underperform like that. That's not good. Transports, they underperformed this last move, and are breaking the 50 SMA, and probably is going to break a lower low. These are things that we're going to look at because that's obviously not bullish. You don't want to see that. UDOW, that's a lower high. Let's look at our bonds. TLT, I still think bonds are going higher. You know I'm long bonds, and I might have actually, the money I take off, I probably am going to put in the bond market, something like that JP Morgan preferred, getting 6 1/8%. You know, I might be looking at a different preferred to park that money in. So with that said, TLT is not a bad trade. I think this does go to 124, 125, and that might be an area that I park some money, either that or some preferred stocks. Anyway, that's not a trading vehicle. The TLT is, but preferred stocks are not. Okay, so let's get to the Apple. What am I doing with Apple? Well, I sold out of all my calls yesterday, so I have no calls left. I had 250. Crushed it. These options doubled. Crushed it. I'm not getting greedy. I paid myself. And this is also a very, very important teaching point. And I don't want to sound like I'm above anybody because I don't want that it to sound like that. But I have made a lot of mistakes in my career, and I've talked about those mistakes. And one of my biggest mistake in the past and possibly mistake in the future is my risk management. It's very hard when you bat a high percentage like we do to not get a big ego complex, to not get arrogance, to not think you're smarter than you really are. And I always have to keep an even keel, and one way to do that is when we're high stacked like we are this year and like we were last year. You remember when I went all cash last year in October before the market fell apart? I went all cash, took money out, and I paid myself. And that's what I'm doing again this year. We had a 40-day uptrend. We just had a 7-day uptrend. I'm taking money out of my trading account and paying myself. I always suggest to do that. Number one, it pays you. I mean, that's what we're all here for, trading, right? To make money so we can spend money. If you turn 10,000 or 100,000, then you're trying to turn 100 into 1 million, you're going to fail because your risk management will be out of check. So whatever you start the year is, let's say it's a $20,000 account. If you get it up to 30, 40, take money out. Take money out. It prevents blowups. And even me, who's been trading for 20 plus years, everyone's got their own trading demons. Whether it's emotions, opinions, risk management. That's one I've always fought in the past. That's always one I'll probably fight in the future. And it's real simple. How do I battle that demon? I take money out, pay myself. And I've gotten some really nice emails lately from subscribers that are doing very well, and that's awesome. It makes me feel really good. But the reply back is, great trading, congrats, take money out and pay yourself. And I'm always going to tell people that. Okay, so what's Apple doing? I took money out and paid myself. It's getting near resistance. Is it over? Maybe not, but who knows? It could come down here before it goes higher. I still think Apple's going to blow through 190. 195 and get close to 200. It doesn't matter what I think. I own 10% Apple. I'm going to hold on to that. I'm going to scale some SPXL today, maybe some QQQ, and go from there. Amazon looks really good. And I do think if the market pulls back, this one might actually lead us, that and Apple, for the next leg higher. So I think that looks really good. Netflix has been very tricky up here, and you can see MACD has not been heading higher. It's been heading lower since January 25th, and price has done nothing since then. This is a momentum trading stock. Right now, it doesn't have momentum. Booking hasn't done anything forever. Expedia, the same thing. Tesla, grinding lower. It's in a 3-4 day downtrend. It looks lower. It's still been a tough stock to trade. You got a gap to fill here on Facebook. MACD is at almost new lows in the year. It's holding the 50 SMA. Looks like a very tricky trade. I wouldn't touch it right now. Google looks very good, so I like Google. I think Netflix, if it gets momentum, can look very good. I like Amazon. I like Apple, so I like FANG here. And I think that looks pretty good. NVIDIA, I think this is in the 90% club from our last entry. We talked about, we really have been talking about NVIDIA since last year. What I said when this thing was heading down is you do not have to catch a falling knife. Wait for rules of engagement. We got long in here, right? We got long here and then long there. And I said this was going to be a bottoming process. It's going to be inverse head and shoulders or a WV bottom. And head, left shoulder, right shoulder. Very nice price pattern. And that looks good. So ride that one infinitely versus your entry as your stop. Looks pretty good. Intel, Texas Instruments. I think they all pretty much look the same. AMD. I think Avgo looks good. It did not engage to add long today. It needs to see price strength confirmation, which we're not seeing. OLED, I believe, still looks okay, but we don't have MACD, so that's a tough new trade. We talked all last week about Xilinx is going to new highs without MACD, and once it does, it'll probably come drift a little bit lower. So far, spot on with that idea. Microsoft looks good. Oracle looks okay. Adobe, Coop, some of the software stocks are starting to slow down now, losing momentum. CRM, Workday, Jobs, Splunk. Everything I'm scanning right now is pausing. Google and Amazon probably look the best so far out of everything. Teams still looks good, but the MACD is flat. It's a tough new trade. Twitter, Snap, Roku. Don't see anything really new there. Let's go to China. Baba, Baidu, flat, YY, NTES. Yeah, Sina. I don't see anything new there. CYBR looks fine, but once again, we don't have any momentum indicators. I don't like buying a stock with momentum when our number 2 rules of engagement MACD is heading lower. That's just, it's gonna if it goes higher, it's gonna go higher without me because it doesn't have my momentum indicator. VMW looks really good, but it's losing its luster too. We looked at that one. Momo, Box. Don't see anything really that's catching my eye. GoDaddy, just slowing down. SQ, Wix. Come on, Wix. Whoa, that's a nice candle on Wix. That's a nice Wix. Downtrend line break. Our number 1 trade is what? Break of downtrend lines, break of uptrend lines, bull flags above or bull flags break up. This looks like a bull flag above a downtrend line with a MACD bull cross. Looks like it's probably going to go back to 120. Wix looks pretty interesting here. Let's flip to stocks in the banks. And they look as boring as they've looked in a long time. I don't know what to say here other than they're just not setting up. We tried one with Bank of America. It's a good-looking chart pattern, breakout, and just comes right back down, just like what we talked about with the IBB a couple of weeks ago. CME continues lower. We talked about this. Bear flag below the 200 SMA. 10 SMA went through that. We talked about it rallying to the 10 SMA and most likely doing a double bottom. If it does a double bottom and gets back above 171.5, you could trade it long. Otherwise, it's hitting new lows with MACD. So this continues to be a bearish price pattern. ICE, CBOE, they're not going anywhere. Tilray, wow, that thing just fell asleep. CGC, Kronos, yeah. We don't have a lot of, let's look at IQ, Docu. Docu broke an uptrend line. It's actually setting up short. So we're losing momentum on some of these momentum stocks. Let's go to oil. I mean, this is just sleep fest here. And you got to trade banks and oils when there's momentum, and there's just nothing there right now. Like I said, we tried Bank of America, it reversed, and I still think Bank of America is fine if you're looking 6 weeks out. Unfortunately, for a trade, you know, if you're stuck in the trade, sell a covered call. I mean, that's what I would do, because that just looks boring to me. It looks like a grind to no man's land after a failed breakout. So just be careful. If you get stuck at anything, you can use the previous day's low if you're a hybrid like me as your stop, or sell a covered call to give you more time in the trade, because some of these are getting very, very sleepy. Gilead, let's go to that sector. Jazz. Yeah, it's hard to find a leader right now to get excited about, and maybe that's why I'm 100% cash in my trading account. Aluminum, REGN. I know I'm flying through these. I just don't see anything. That one looks okay. That is catching my eye. That looks good, but it just filled a gap. A lot of times when it fills gaps, it drifts back lower. So that's more of a project. WWW. CMG continues to pay. I mean, that is a huge leader. Monster, that's crashing. UBNT. So I don't know. In a nutshell, let's talk about what we've talked about. I mean, I think OLED looks okay. Xilinx, obviously. Avgo, we talked about. Amazon, Google, Apple. I think those are good leaders, and I think if we do go higher and we reverse today or tomorrow, those are the stocks to be in. Banks look sleepy. Oils look sleepy. Small caps they don't look good. Transports don't look good. And we're seeing a lot of momentum indicators, MACD, heading sideways. So what is that telling me? Well, like I just told you, I went all cash yesterday in my trading account. Not necessarily because I'm bearish, because we've lost momentum. And if we're going to lose momentum, I want that to be all cash and trade 5-minute rules of engagement. I could trade 5-minute rules of engagement on Apple, Amazon. You can go on and on. Let's just look at a few of them, see if they had nice trade setups today. We came in at 9:30. There was a couple shorts on the ES. And you might say that's a counter trend trade. Why short? You don't have to short. We've talked about that before. I'm just saying there really wasn't great long setups. We never saw a MACD bull cross to really give us a high odds. Not that you need a MACD bull cross, but it just so happens Fed day is a bad day to trade. And the short side was the right side today. If you look at something like Amazon, our number one trade is what? A bull flag above a downtrend line. So if you're talking about 5-minute rules of engagement, you had your bull flag on Amazon right to start the day, right in here. So if you get long, you get paid a little bit, not a lot. So, and this is a stock that's actually looking good, and it's only paying you $1 or $2. That's just telling you the market conditions. Same thing here with Google. Breaks the downtrend line, bull flag above. This one you could have made $10 on. That's good, but not quite 1%. I mean, so these are good trades. When we're in no trend and downtrends, which we're not in, the best trades are 5-minute rules of engagement. When we're in an uptrend and things are slowing down and we're in a event risk day like today with the Fed day, if you're going to trade 5-minute rules of engagement, look for the strongest stocks out there. Google, Amazon, I believe those two are the strongest right now. So those are the ones I would trade on top of the ES if I'm going to do a 5-minute rules of engagement, which is all I'm doing right now in my trading account. And once again, I'm going to lighten up my long market exposure in my investment account to see how things go the end of the week. And if they pick back up either Friday or Monday, what do I always do? I look to add with options so I can get leveraged long again. That's how I trade. Let's keep things simple, stay with the trend, keep an open mind. We can see a shakeout today and tomorrow. That's very possible. We might even get knocked out of trend. But the facts are, currently we're in a what? 8-day uptrend? The facts are, the weekly is still bullish. The facts are, we still have a bullish historical chart pattern comparison. So how this thing pans out, we still need to be long right now. How much long market exposure do you want? That's going to be a question you have to ask yourself that meets your risk profile. Currently, like I said, I'm 110. There's a good chance I go down to 80 by the close, not because I'm bearish, because I want to pay myself and things are slowing down. Things were not slowing down a couple days ago. We were flying higher. When things slow down, I start to book some profits. I start to pay myself again. That's all I got for you for the market video update. Have a great trading day.